One of the things in Twitter speak I would say is that tailwinds are the new headwinds, and in many respects that's very true. If you look at all of the things that are driving the economy forward, from job creation to economic growth, albeit slow, but economic growth, to household formations, to housing starts, we have a lot of great data out there, and that's exactly the data that has market participants being more bullish on the asset class, and exactly the same data that the government's looking at and saying maybe we should start tapering the stimulus that's been pumping up the economy for the last couple of years. The other thing that was interesting, and I didn't think it would be this way, market participants for the most part were somewhat unemotional about the rise in interest rates. We did many of these interviews right when interest rates had gone up to basically a level we hadn't seen in several years, and real estate market participants really shook it off. The thing that's important to remember is that some of the biggest booms we've had in the real estate economy have been in periods of much higher interest rates in real terms. So it's not the cost of capital that really chills the market, it's the availability of capital. And I think one of the big takeaways in the survey this year is how available capital will be for real estate relative to past years, and how the underwriting standards may have migrated towards being bullish on lending and providing equity to real estate. So I think it's shaping up for 2014 to be a really good year for the asset class.
My biggest concern is that we are in a very uncertain environment, and living with these uncertainties, trying to make decisions within all these uncertainties is just difficult. It's hard because there's a new set of metrics that the lenders and the investors are using, which are hard to accommodate in the average decision, and so. I think we're going to be plagued with that. Hopefully what it's going to do is it's going to stay more to the minor decisions, and it's not going to be a year where we spend it like the last couple months watching Washington fail to have an adult conversation and solve our problem.
His concern would be when you look at that disparity between the respondents who want to buy and the respondents who want to sell, and you look at the availability of capital, it's there. Will the market continue to have the discipline to not begin driving prices maybe unsustainably?
My biggest concern is global uncertainty. The thing that's become very clear to us in doing this survey for many years is the interconnectivity. And don't forget, we do emerging trends in Asia and we do it in Europe as well. So those are three interconnected publications because the real estate asset class and capital flows are interconnected around the world.
2014 will be a busy year. We heard from the capital suppliers, the lenders, the equity suppliers of capital, very much want to invest. And they want to invest not just in core or core plus. They're looking for value add, development opportunities. They're just waiting for the market participants to come to them and convince them that it makes sense now. So if we get to that point where a few more deals make sense, we'll see a lot of activity going on. As I mentioned, people want to invest, so transaction volume I think is going to go up. I think lending volume is going to go up, and I think the CMBS market will come back, which will supply capital to markets that maybe to this point have had maybe a short.
My expectations are good. I think there's adequate equity, there's adequate debt. I think people have a very realistic attitude about what can get done and what can't get done, and I think they're going to maintain, solid control over both their business plans and their emotions in 2014.